A little while since I've been on live, but I'm on live because something has come to my attention, and I'm going to focus on buying a home in the USA. I have my shirt on, it says USA. So buying a house in the USA, how do you do that? What is your first thing you have to do? Now, the interesting part is most people think, oh, the first thing I've got to do is get a real estate agent. That's not really the first thing you've got to do. The first thing you have to do is you have to get a home loan. You have to get pre-qualified and then pre-approved. So getting pre-qualified, see, here's my little realtor thing. Getting pre-qualified is just talking to a loan officer and having them ask you questions and answering the questions to see what can you purchase and do you have the means to purchase. And it's really interesting because quite honestly, it's come so naturally to me that I think everybody knows everything you need to know before you talk to a loan officer. So the first step in buying anything, whether it's an investment property or your first property, the first step is getting your paperwork ready. I can't even say it right. Getting your paperwork ready so that when you call me, a loan originator, or whoever else you call, you can answer the questions with a correct answer and knowing that you're telling them what they need to know to help you buy a home. Now, it's not scary to talk to a loan originator. It's funny, I have like my little notes, like I've never done a loan before. I don't even know how many I've done. So what happens is when you're buying a home, whether it's in the I'm talking about the whole United States. So whether you're buying it in California, Texas, Florida, Tennessee, wherever you're buying, unless you have cash, you're gonna have to get a loan, okay? So thinking logically that you have to get a loan, you're going to, if you talk to a loan officer, I said, I have all these notes. And when I have notes, I'm actually worse than when I don't have notes. But anyway, when you're going to call the loan officer, they're going to ask you three main questions, okay? So the first question when somebody calls me, well, most loan officers are going to ask you three main questions. I'm going to ask you a whole lot more because I want to make sure that you're doing what you're doing and you're starting in the right direction. So one of the first things I ask people when they're thinking about buying a home is this going to be your forever home? Or are you going to buy one home and do a step-up process? And when I talk about doing a step-up process, there's a thing called pyramiding. And pyramiding is when you buy one property, you keep it. As it goes up in equity and the equity grows, you take the equity out and you keep that property and rent it out and buy another property. And then as that property goes up in value, you take out the equity from that property and you buy the next property and you keep buying property. It's called pyramiding. And that's what I did. Now there's other things that you can do. Like some people just don't want to be, we call it a whole different name now. It's not called a landlord anymore. It's called a housing provider. So most people think, I don't want to be a housing provider. If you have the type of job where you're going to have your job forever, you have job stability, there's no way you're going to, there's no way that you're going to, I have my favorite people popping on because they're like, oh my God, Sharon's live finally. But if you have a job where you know for sure, you have no doubt in your mind that when you grow old and gray, that you're going to have a retirement and you're going to be safe and you don't have to have anything left to take care of you, then great, have that kind of job. But when I was young, my first thought was, I want to have enough homes that when the rental comes in, hi Ray, when the rental money comes in, I'll be able to be 65 years old and just sit back and collect rent. I mean, literally, that's what I wanted to do when I was 18 years old. And so I started with my first property. How can I register for my in-person classes? Just text me and I'll give you a call and talk to you, or call me. I actually am one of the few instructors for real estate that will talk to you on the phone and not charge you to talk to you and tell you how to take a class. So I'm gonna say it once at the beginning of this video, 714-745-6348. That is my direct line. It is my cell phone number. People go, oh, I can't believe it's your actual phone number. It is really my phone. So it's not the one I'm recording on right now. I'm recording on my brother's phone. So anyway, I want to try to stick to this so that we can help as many people as we can go in the right direction before they call their real estate agent and try to go shopping for a home. So what usually happens is you're going to think, I'm going to go to a bank, I'm going to go to a mortgage broker, I'm going to go to a banker. Who am I going to go to talk to about a loan? So the first thing that happens when you call me about a loan, or it depends on who you call, I'm going to ask you, what are your goals? What do you really want to do with real estate? Do you want to buy one home? And then when that one has equity, do you want to sell that home and buy a bigger home and then when that one has equity, sell that home and get your forever home. How is it that you're planning on doing this? And what are you planning on doing? Please, you guys, like me and comment and subscribe and all that great stuff that I'm supposed to ask you to do. Because I never ask anybody to do anything. And I'm just going to keep going with that because I want to make sure that I help you as much as I possibly can. Because if I can help your buyers not be so scared to start the process, then more people will own their own homes. So like I said, it doesn't matter whether you're buying in California, Texas, Tennessee, wherever you're going, you can, you're going to have to get a loan unless you have a lot of money for a down payment. So the first thing I'm going to ask you is, what is your goals with buying a home? And, you know, if you just say, hey, I just want to get my first home, get my feet wet, that's fine. You can do that. But the next question is going to be, how is your credit? And when I say, how is your credit to people, sometimes they go, oh my God, my credit's horrible. And sometimes they say they don't know. And so I always say, well, why do you think your credit's so horrible? And I'll never forget this one buyer that said to me, my credit is so horrible, I don't think I'll ever be able to buy a home. And I said, why is it so horrible? And they said something like, I had a bankruptcy like 10 years ago, and I just don't know where my credit's at now. And I'm like, 10 years ago, really? A bankruptcy? Great. After about 2 years, after a bankruptcy, if you start building up your credit, you're going to be able to buy a home without a problem. So you may think you are worse. It says, important question, which phone? And I don't know what that's, oh, Ray. Oh, the 714 number, the 7456348 calls my direct line. It's right here, okay? But don't call me now because I'm on live. If I'm not on live, I'll answer, okay? So anyway, what happens is people think their credit's worse than it is sometimes, and sometimes they think it's better than it is. So the best thing that you could do, and I hate to do an ad for Credit Karma, but before you go to Credit Karma, I don't know if you, see, I know so much that I think you guys already know this, but what some people don't know is every year you can get a free credit report from all 3 repositories. That's what they're called, repositories. So you can get a free credit report from all 3 of them, and you can see what's on your credit. And the whole reason for that is they want to make sure that we're able to kind of watch our credit. Now, we're only allowed it once a year, so I don't know how that's going to help us watch our credit for identity theft. Okay? Because if you see an open account that you didn't open, then you know somebody's messing with your credit. Okay? Now, the thing about credit, you know, depending on what people tell me will be depending on what I tell them about their credit. But for the most part, as long as you pay your bills on time, your credit should be somewhat decent. Now, where I see people make mistakes is they have too much debt on their credit report. So if you have a credit card that goes to $10,000 and you're at $10,000, that's going to hurt your credit score. But if you have a credit card that goes to $10,000 and you only owe $3,000, that's going to help your credit score, if that makes sense. So they want you to be somewhat in debt. And I can't read all these things that you're, just text me on my phone. That would be great, Ray. Because I'm trying to stay focused on how to help people, how to get the people that are trying and thinking about buying a home to move forward, because not buying something right now, the prices are going to continue to go up. Maybe they'll dip down a little bit because the interest rates are going up. But for the most part, get a home. I mean, you guys are overthinking this whole thing, because when I bought my first home, I didn't overthink anything. I went and applied at a developer, and when the interest rates were really high, the developer said we didn't qualify anymore, so I went and I bought a cheaper property. Now, that's the other thing that I got to talk to you guys about. If you're a first-time home buyer, don't be so damn picky, because I got to tell you, I was in escrow with a brand new beautiful condo that was being built. We picked out the flooring, everything was going great, and interest rates went from 8 to 18%. And my ex-husband's mom, my fiance's mom at the time, she found these really crappy condos, and they were they were crappy, and I still have it. What it was somebody, a developer, purchased a apartment complex, and he did what I want to do. I still want to do this: buy a small apartment complex and turn them all into single-family affordable homes. And that's what he did. But because interest rates were so high, we were buying into a percentage of the units. So we were not buying a single condo. We were buying into a percentage. This is called a co-op. They're called cooperatives when you're buying a percentage. And you cannot get loans for that in the, well, I don't know where you will get a loan for a co-op, but they're super high interest rates. But what he was doing was he owned it, and he carried the paper on it. So the interest rate was lower. And we qualified for it, and it was only $58,000. Now, this is not my ideal property. This isn't the thing that I think is the best thing in the whole world. I saw it and I'm like, oh God, this is like the worst property in the world. Okay, it has outside stairway that goes up. You know the kind of staircase that has the rocks on the cement and you can see through them? That's the kind of staircase it is, with an ugly patio and not a very good floor plan. But I wasn't going to be picky because that was what we could afford. So I bought it, and it was $58,000. And eventually it got up to $150,000, and we took cash out of it, and I bought my next home, and my next home, and my next home. Hi, Tyler. How you doing? So it just depends. I can't read them that fast. Tyler's my favorite real estate agent that's following me, and we got to give him some referrals, you guys. You got to help him with those buyers out there. But anyway, here's the thing. Don't be so picky on your first property. Buy it, get your feet wet, let the value go up. Once the value goes up, you can take the equity out of that property. You can either sell it and buy your next property, and maybe that's a better home for you, or you can keep it, refinance it, take cash out of it, or get an equity line out of it and buy your next property and rent that out. So fast forward 35 years or so, and guess what? That property is, the rent on that property is $2,200 a month, and it costs me $938 a month. So you can see that I have some cash flow there. It's slightly over $1,000 a month cash flow. If I have 5 of those, I collect rent, I get $5,000 a month rent, plus my Social Security when I get older, and plus any kind of pension I may have. So you may have a pension in a job that you're gonna have in the future, and you may not wanna be a landlord, but I will tell you, it's one for sure way of having some security when you get older. Now, so like, don't be so picky, okay? That's number one. Now, the 3 questions they're gonna ask you. So people are scared to talk to loan officers. You guys, I'm an average loan officer. An average loan officer is a 55-year-old woman, or nowadays maybe a younger kid. I don't know, but we're not gonna bite you, okay? We're talking to you on the phone. A lot of times I do a Zoom appointment with my clients, and I want you to have some things ready when I talk to you, okay? This is lesson number 1 on how to buy a piece of property, by the way. So the first thing I'm going to ask you to have is a full month of pay stubs in front of you. I cannot legally ask for them, okay? I can ask you to have them in front of you so that I can ask you the numbers, okay? So you want your pay stub, your most current pay stub with the year to date, how much have you made year to date, and what is the date on the pay stub? What's it pay you up to? Not the date you got it, what it pays you up to, because I'm trying to figure out how much money you've made this year. The next thing I need is your last year's W-2s and your year before. I need 2 full years W-2s, and I need to know what's on your most current pay stub. Now, once you get going on the loan and you're for sure who you're gonna work with, after you find a property, okay, your loan officer can have you give them that stuff. So technically and legally, your loan officer cannot ask for your pay stubs or your W-2s to be in their hot little hand until you're ready to go. So the steps go like this. You talk to the loan officer. If I think you can, or if the loan officer thinks you can get a loan, then we're gonna do an application. And most applications are super easy. Most loan officers will send you a link, and it will be so easy, it's ridiculous. It says, what's your name? It says, what's your birthday? Where do you live? How long have you lived there? It goes through like that. It asks you questions. You answer all those questions. It will auto-populate into the application. Once the loan officer gets the application auto-populated, anything that's missing that we need to know to get you your desktop approval, that's your actual loan approval, anything that's missing, we're gonna call you and go over it together and see what you can provide us with, and then we'll go ahead and get you a desktop approval. Makes it sound very easy, but here's the deal. These are the things that we're gonna ask you. So I keep saying 3 questions. First question, how is your credit? How are you gonna know what your credit is? Simple. You're gonna order your free credit report from all 3 repositories. Like I said earlier, you're gonna order all 3 of them for free. Once a year you can do that, and I bet you haven't done it yet. It's not called freecreditreport.com, it's just called creditreport.com. If you can't find it, you might want to look at annualcreditreport.com. It's easy to find. You'll find it. You'll be able to order all of them. Anything that's derogatory on there, it may be on there and it may not be right. You can go ahead and dispute it. So once you dispute it, you can work on getting it off. The other thing is, I know that law, it's not a law, it's a bill, I think, they were trying to pass that said if you had bad credit or you didn't have a big down payment, you got a lower cost on your loan. And if you had good credit and a big down payment, they were going to charge you more. Okay, well, that got stopped. So they're not going to charge people more if you have good credit and a good down payment. They are going to try to give a lower cost to people who have a harder time trying to collect the money for the down payment. So the first question is, how's your credit and what's going on with your credit? We need to know. And it's going to depend on, your credit will depend on what kind of loan you're going to get. So on an FHA loan, you could have a little lower credit score than you could have on a conventional loan. And on FHA, it's 3.5% down payment. On conventional loan, if you have a good credit score, you could put 3% down. Both loans will have mortgage insurance. On FHA, it's FHA mortgage insurance, which was just recently lowered to try to compete with conventional loans. Conventional loans have low mortgage insurance, and anytime you put less than 20% down, you have mortgage insurance. Now, if you don't mind having a slightly higher interest rate, you can get rid of the mortgage insurance by buying it out. Okay, so yes, you can buy out the mortgage insurance. The good news is you get to write off the interest. So when you're a first-time home buyer, a lot of first-time home buyers go, this is what I get all the time, because I always ask people this. I go, so what are you expecting your house payment to be? And then the buyer says to me, are you ready? This is what they say. I know you're going to laugh because you're going to go, I say that. So what's a conventional loan score required? You know what? They just changed it, Candy, so I'd have to check on it. You could text me. It used to be that you had to have a 680. Now we're thinking 620, but I don't want to make myself look like an idiot and say something that's wrong, because things are changing so fast. Our government is changing things and trying to help people buy homes. At the same time, we're in an enormous amount of debt. So there's a lot of stuff going on that's political, and it's changing interest rates and programs constantly. I just looked at the interest rates and the programs and almost had a heart attack myself. But you know, there's different programs that you can get to help you buy the home. And the thing is if you don't buy the home, you may never get a home, because the home prices just keep going up and the interest rates go up, but everybody's waiting for something to happen that's not going to happen. Okay, so let's kind of try to stick with, let's see what we can do first, and then I'll tell you about all, and then you guys can ask me questions. You could text me and I can tell you what the credit scores are that you need to know, of course. So anyway, after I talk to you about, you're very, very welcome, Candy. After I talk to you about what your credit is, my next question is going to be, how much money do you have for a down payment? Now, this is a question that blows my mind a lot, but now I just skip, because whenever I answer questions, I totally skip when I'm live. But anyway, what happens is I ask people about your down payment. And people think that because there's down payment assistance programs, that they don't need any money. Okay, that's not true. Even veterans with the VA no down payment program, they still have to pay for closing costs. Now, in a market that is a buyer's market, you can ask the seller to pay for closing costs. I actually did that. I want to say it was almost a year ago now. I can't believe it's been almost a year. Anyway, he was a veteran, and what we did was we were able to buy down the interest rate because we asked the seller to pay 2 points. And 2 points on his loan was $16,000. And the seller was willing to pay that $16,000, and we got him 5.25. And that was 5.25 on a 30-year fixed rate loan. Now, if interest rates come below 5.25, because he's a veteran, we could do what's called a streamline refinance and drop his interest rate with no appraisal and nothing, pretty much, just as long as he's paying his mortgage on time. So there's so many things I can tell you to help you, but when we jump around, I can't stick to what's it really going to be like when you call a loan officer. I'm really going to look about like this when you call me on a phone conversation or a Zoom call. And I'm going to ask you, what kind of home are you looking for? What are you thinking about? Are you thinking townhome, condo, I don't know, townhome, condo, PUD, something with an association fee? Are you looking for a single family residence? And if you don't qualify for a lot, don't be discouraged. Buy something anyways. Buy a studio condo, something stupid and little like I did. If you don't get your feet wet, you're never going to get your feet wet. So I bought my stupid condo that was a piece of crap, but the good news is it went up in value, and I bought my next home. And my next home was a 3-bedroom, 2-bath, 1,600 square foot single family home. Perfect to raise a family in. I should have stayed there, or I should have kept it before I moved over to this house, because that house that I bought for $149,000 is now worth about $720,000, and I'd be collecting about $3,500 a month rent, and it would be paid off. So these are why you invest in real estate. However, my wonderful husband at the time said I had to sell that house to buy this house, which was not true. But you know what? If I didn't sell that house to buy this house when I bought his butt out, and I bought this house on my own from him, I probably wouldn't have been able to afford it. So things happen for a reason, and you just have to roll with it, okay? And your loan officer isn't your enemy, they're your friend. The loan officer is going to ask you questions, and you need to tell them the truth, because if you tell me the truth, I can tell you what you can and can't do. If you can't do something right this minute, then we can work on how and why we can't help you right now and what you can do to help yourself. Now, sometimes you can use your parents as co-borrowers. I have no idea what you just said. Husband number 2. Yeah, Ray, there's husband number 2. Husband number 1, I don't talk about because it's just not worth it, okay? That was my high school sweetheart. Life lesson number 1. Don't get married until you're at least 28 to 32 years old. I got married the first time. I got engaged at 17 and a half. So don't do that. Husband number 2 is my son's dad, and that would be this house. And then after I divorced him, I went on a buying spree because I was able to buy a bunch of homes because I learned how to buy homes. And if you guys learn how to buy homes, you can do it too. So make sure you comment, ask me questions, and thumbs up and all that good subscribing stuff, whatever. But let me look at my notes on what I wanted to make sure that I got to you on lesson number 1. So on lesson number 1, the first thing, don't be scared to talk to your loan officer. Your loan officer is going to help you and make a not goals, but like a map on how to buy the home. They're going to tell you what you need to do. And if you have no idea about your credit score, order the free credit reports from all 3 places and see what's showing on your credit report and what the score is. Any good loan officer can tell you what you can basically do to increase your credit score. And one of the things is pay down about 70% of your debt on your credit card so that you owe 30%. That will increase your credit score. The other thing you could do is what I did is I got one credit card that went really high, and I paid off all my other credit cards down to a very low amount. And that one was such a big credit card that I didn't even use half of it. So by getting a big credit card that paid all the other ones down to almost nothing, it made my score skyrocket. So that's one of the things you can do. If you have no credit at all and you're trying to figure out how to get credit, what you do is you get a secured credit card. So a secured credit card is when you give them $300 and it's more like a debit card. The place that I used, and I think that they actually came out originally to help people build their credit, is Credit One. That's what they're called, Credit One. So Credit One was key after the mortgage meltdown. So I always had 800 credit scores and I was doing great in life. And then we had the mortgage meltdown. And I had 12 houses and I went down to like 7. And that sucked. But I had to get rid of them because the debt wasn't helping. I mean, and people weren't paying rent. So because of that, I didn't want to screw up my whole credit. And I did. I mean, I will admit, my credit score went down to 496. And that makes me feel like crap because I had always had 800 credit scores. But if renters can't pay, then landlords can't pay. And we're not called landlords anymore. The new term is property provider or home provider, I think is what we're going to be calling them. So we're not landlords anymore, but back in the day I was. So anyway, with that said, run your credit. Don't be scared of your loan officers. They're there to help you. And let's see what else. How much down payment do you have? And it was interesting because I was talking to a young couple today and she just got her real estate license. She did her first deal. Last year I helped her with her buyer. I was the loan officer. She was the buyer's agent. And we helped her client get an awesome house. And so she's looking at, and I said to her, if you want to be a real estate agent and you want to help people, they have to respect you and you should own a home too. And she's been trying to save money to buy her own home. And we're looking at doing a down payment assistant program. And the interesting thing when you're talking to new home buyers that want to buy a home, and I want to go back to that question about what do you think your house payment should be? And I didn't want to be on really long. I was only going to be on like 10 minutes and do the next one and the next one. But when there's interesting stuff that's really good for you, I want to keep going. So when I talked to her, she made a good commission last year. And I said, well, where's that money? And she's like, well, life happens and you got to use it. I'm like, no, you got to save money aside. Because if you don't save money aside, people think when they get the first time home buyer programs. Okay, so let me explain CalHFA. They give you money, 3%. They don't give it to you. It goes as a lien against your home. That's for the down payment. Now, if you borrow their money for the down payment, you get a higher interest rate than if you don't use down payment assistance program. Then if you borrow money for the closing costs, so you have the down payment and the closing costs, if you borrow the 2.5% for the closing costs and 3% for the down payment, then your interest rate is going to be even higher. But you're also going to need what we call reoccurring closing costs. Reoccurring closing costs are your property taxes and your homeowner's insurance, okay? And those are things that are collected when you make your house payment. It's called PITI, principal, interest, taxes, and insurance, okay? So when you put less than 20% down, you have to pay your principal, interest, taxes, and insurance every single month. Now, if you don't want those impound accounts where they're recurring all the time when you're making your payment, you can pay them yourself after you have equity in your home. So back to the beginning again, one of the questions I ask my clients is I go, what do you expect your house payment to be? And whenever they say this drives me crazy. I was about to say this and then somebody asked me a question, is they go, well, I'm renting right now. And we're paying $3,200 a month rent, and that's really comfortable with us. So, we really don't want to go any higher than $3,200. And I'm like, okay, but you're buying. You're not renting. You're buying, okay? So your payment is going to be higher. So we have to have some common sense. And when I say common sense, a lot of people say, well, common sense is not so common. Okay, if you're going to buy a home, it's going to cost you more per month. But for those people who are not watching it, I know more people will watch this later. And for the people that left, they're going to kick themselves in the butt that they missed this part, because this is so important, you guys. Listen to me carefully. I'm not a CPA. I'm a broker. I'm a real estate broker. That means, and I do loans, okay? My license number, I better say it so I don't get in trouble, 01018706. I got my license in 1986 to sell real estate, and I got my broker's license in 2006, I believe. But I started doing loans as a processor in 1984 and investing in real estate in 1979. So you guys can do it too. I was no different than you guys. Okay, when I was 18 years old, the only difference was I saved up all my money. So whenever I got birthday money, here goes. Birthday money, work money. I worked when I was 8 or 10 years old. I got a paper route, and Christmas money, everything I ever got, as much as I could save, I saved. So when I was, thank you, Tyler. When I was 18, I had $20,000 in my bank account, and I wanted to buy a house because renting is throwing money in the toilet. I never, ever wanted to rent. So I bought my first property out from my parents' house. I moved from my parents' house into my condo, okay? But I didn't expect not to have a house payment or to have a little house payment because I own it. So this is the thing where I said, I gave you all my licensing. I'm not a CPA and I'm not an attorney, okay? So, but this is what you need to tell your buyers, your friends, your family, anybody that wants to buy, or you can just give them my number. So anyway, here goes, okay? I understand you want to buy a home. Do you understand how money works? Because a lot of people get a job, like my son. This is the best information you're going to get ever. My son, when he started to work, so he tried to get a job when he was young. He couldn't get a job, so we decided to flip homes. And we were flipping homes and doing pretty well. But then he wanted to get a normal job. So he got a normal job, and he got stolen from me. I know this is so true. So he got stolen from me. Somebody saw what a good contractor he was, and they stole him so that he could be a framer for them. And he was on salary for $125,000 a year. And so he had zero dependents, zero. So with zero dependents, which is what most average Americans do, is you hit zero dependents on your W-9 so that the government takes as much money as they can now so that when tax time comes, you don't have to pay them. You get a little bit of money back. So you let the government use your money, and when it's time, you get a little money back. And you're all excited because you're getting your own money back, which is super crazy to me. But anyway, so what happens is when you buy a property, and a lot of people don't understand this, when you buy a home, the home that you live in, remember, I'm not a CPA, the home you live in, you're allowed to write off the property taxes, get to write those off. You pay them, but you write them off. You get to write off your interest on your home, okay? So your interest and your property taxes. The other thing that you get is you get a homeowner's exemption. I need some more thumbs up, you guys. I'm giving you a lot of good information and comments. So basically, you get your interest, you get your property taxes, and you get a homeowner's exemption. With all of those three things, what you can do is talk to your accountant, talk to your CPA, and say, I'm buying a home, and this is the price range that my loan officer told me. They told me I can buy something for $725. How many dependents can I take and get more money now? Did you guys just hear what I just said? Get more money now. So the government takes less out of your paycheck. And you're like, no, if they take more money, if I get more money now, then I'm gonna have to pay them later. No, you're not, because you're gonna have a tax write-off. Did you guys just hear me? Tax write-off when you own your own home. Okay, so you can afford the higher payment, so you can pay more for your home than for a rental property, because now you're gonna have more dependence on your taxes, so that you're not gonna get money back when you do your taxes. You're gonna break even, but you're gonna be able to afford your new house payment, and you're gonna own your own home, and the equity is gonna go up, and you're gonna have a place to live when you get old, because you're gonna build wealth. A really great example of what happens when you own property. More money now to set you on your way. Yes, exactly, Ray. So this is important information. So a good example, and I've said this example online before, is my son was, when he got that job and he was making a lot of money, he was expecting money back because they kept taking so much out of his paycheck. And so when he went to go do his taxes, I got the phone call and he said, Sharon! And I said, what, Blake? He said, I owe $2,600. And I'm like, well, did you think the IRS was a bank account? And he said, well, I thought I was going to get some of it back. I was looking forward to it. And I said, and at this time, so this was years and years ago, and the tax laws were different. I said, I know, poor Blake. Yeah, you know, poor Blake makes a lot of money now. He's a contractor building very expensive homes. So anyway, what ended up happening was I said to him, you know, ask your accountant if you can have one of my properties, and you can write off my rental property. Now let's talk about rental property. What can you write off on a rental property? On a rental property, you can write off everything. Did I just say that? Everything. You can write, if it's a condo, you can write off the HOA, you write off the maintenance, you write off everything it costs you. It's a business. So because it's a business, it has business expenses. So you get to write off all the business expenses, okay? So what he went from was $2,600 that he owed. I gave him my favorite condo, the one I just talked about, and he was able to write off the homeowners association, the maintenance, the taxes, and the interest. He was able to write all that off, and he got back $2,500. So he went from paying $2,600 to getting back $2,500. So can you see where owning real estate is a real benefit? So the first time you talk to your loan officer, these are the things you're going to need with you. You're going to need your most current pay stub. You're going to need to know what the year to date is. Did you sell his motorcycle? Yeah, we sold a bunch of them, Ray. He had 9 motorcycles. They were all, he's had a 150, I think a 250 and a 450. Would those be right? They were dirt bikes, and he only rode the orange ones. I forget what they're called. K something. Anyway, I forgot what they're called. Anyway, you should know, they're motorcycles. Now he has I don't know, what would it be, a force of motorcycles. I think he has 4 motorcycles, from a Ducati to something else to a street. They're all street bikes now. They were all dirt bikes. But anyway, the point of the matter is, be ready when your loan officer goes to talk to you. Have your most current pay stub ready. Know what yeah, KTM, you got it. And he loves orange. In fact, he was going to paint his truck orange. Have your paychecks ready so we can see how much your year to date is. You need to know what the year to date is, not what you got, but what your gross was. Okay, your gross is how much you got, and then your net is what you actually got. So I want to know your gross year to date. I want to know the biggest number on your W-2s for the last 2 years, and that's your income. Your debt. What are you paying per month? Now, if you have a student loan, you need to tell me about a student loan because student loans they're the kiss of death. You do have to make payments on student loans. So student loans, credit cards, anything that you're paying per month that I can figure out how much debt you have and how much income you have and what you qualify for. So that's the first step, talking to a loan officer. And I could talk to you about a mortgage broker versus a mortgage banker, and maybe that's what we will talk about next time. Going to a bank versus going to a mortgage broker who's going to help you figure out what to do. So I'm going to say bye for now. I hope you learned a lot. There's a lot of information on this video, and I'm going to take you through the steps of buying a home. As soon as I can find a home buyer who wants to be a guinea pig and let me do a video on them all the way through the steps, I will do that if I can find somebody who wants to do that. So I believe I've told you everything you need to know for now. That's talking to your loan officer. The main thing is don't be scared from your loan officer because they're there to help you, all right? If you need me for anything, oh, you love me, that's awesome. Thank you, Ray. And if you need anything, text me, call me. I'm here to help you. And I'm going to take you through the steps of buying a home. And we'll talk about maybe what we'll do next time is we'll do the numbers. We'll take an imaginary buyer and show you the numbers of how it works for the debt to income ratios. So maybe we'll do it tomorrow because I have nothing to do. You're very welcome, Candy. I have nothing to do on this Memorial weekend. So see you later. Have a great day. Have a great weekend. And for those of you who have been or are in the military, thank you for your service. We really appreciate you. Have a great Memorial Day and a great weekend. I will be back soon to help you with more information. Bye for now. Get out there and start thinking about buying a home.